Do you pay tax on equity release? It's a question that haunts many homeowners considering this financial option. And today we're diving deep into the topic to give you all the answers that you need. So stay tuned as we explore how equity release can potentially rescue you from inheritance tax and more. Let's start by understanding what equity release really means. In a nutshell, it's a type of loan secured by some or all of your property. And the best part? You don't have to repay it until your home is sold, typically when you pass away or move into aged care. You can access the money whilst continuing to live in your home without any fear of eviction. Now that we know what equity release is, let's explore the two main methods available in the UK. UK lifetime mortgages and home reversion schemes. The most common approach is the lifetime mortgage, where you release a portion or all of the equity in your home and receive a lump sum. And here's the best part, you won't have to make any repayments on the loan amount or interest until your home is sold. Plus, you have the option to pay the interest if you wish, but you'll never owe more than the home's value, ensuring your estate beneficiaries won't be burdened by any shortfall between the sale value and the total debt. On the other hand, we have home reversion schemes. With this option, you give up a percentage of your home's value in exchange for a fixed amount, paid as a lump sum or a recurring payment. Although you'll receive a smaller payment than the home's true worth, you still get to live in the property without any risk of eviction. It's all about finding the right fit for your unique needs. Now let's talk about the benefits of releasing equity. This financial strategy offers a range of advantages that can significantly impact your later life. First, you'll have the option to receive a lump sum or recurring payments, providing you with much needed financial comfort. Moreover, you can rest easy knowing that you can't be forced out of your home. It's your sanctuary for as long as you want it to be. Another key benefit is that you don't have to pay anything back until your home is sold. This allows you to enjoy the present whilst planning for the future. And to top it off, you'll be glad to know that you're protected by the Equity Release Council, ensuring your rights and well-being throughout the process. So with equity release, you have the freedom to choose whether or not to make interest payments. It's all about creating a financial solution that works best for you. So let's address the burning question. Do you pay tax on equity release? Unlike income tax, the money you receive from equity release schemes is not subject to taxation. Income tax is only applicable to payments received from employers or self-employment activities as a sole trader. So when it comes to releasing equity, you can breathe a sigh of relief. What about other types of tax? You don't need to pay any other tax on the lump sum amount or regular payments received from equity release schemes. Remember, equity release is not selling your house. It's a loan against your property. Therefore, capital gains tax, which applies to property sales, is not owed. When it comes to tax, equity release is your tax-free ticket to financial freedom. Equity release can potentially help you reduce inheritance tax. However, it's crucial not to base your decision solely on this aspect. Let's dive deeper into the world of inheritance tax and how equity release can play a part. Inheritance tax is a tax applied to someone's estate and financial gifts made within the 7 years before their passing. It affects all estates unless it's solely inherited by a spouse or a civil partner. If your estate isn't passing to a spouse or civil partner, inheritance tax can come into play. But fear not. Inheritance tax is only due on estates valued above £325,000 or £650,000 if you've already received an estate from a spouse. And it's charged at a rate of 40% of the amount exceeding the threshold. Now here's where equity release can make a difference. If you release equity and give some or all of the money to a family member, then live for at least another 7 years, that money will not be subject to inheritance tax. This smart move could save your beneficiaries a significant amount, especially if your estate exceeds the inheritance tax threshold. Of course, it's important to discuss the strategy with an equity release advisor to fully understand the potential risks and rewards. Some people worry that they'll receive a significantly lower amount for their home through equity release. While this is a valid concern, lenders take this approach to protect themselves from potential property value declines over time. It's essential to have a clear understanding of how equity release works to make an informed decision. In addition to research, it's strongly recommended that you seek financial advice from a provider authorised and regulated by the Financial Conduct Authority, the FCA. They can guide you through the process and ensure you have all the necessary information to make the best choice for your unique circumstances. If you're interested in seeing if you could release equity, then simply click the link in the description below and fill out the short form. It contains a few questions like your property value and your date of birth, and it will give you access to quotes tailored to your circumstance. It's totally free to fill out, and of course it won't affect your credit score. Click the link in the description below and fill out the short form to try it out.